organizations are continuously working towards striking the balance of demand and supply. In our view, it will take some time to reach ideal scenarios. Analysts are predicting that we are yet to hit the upper limit of demand, and that the material cost, especially for semiconductors, might further rise in the near term owing to ongoing inflationary pressures. Moving to the next slide, that is slide number 9. If you look at the breakup of the orders, demand in this quarter was driven by orders from across the segments, including transmission, industry, rail, metro, and power quality. While the HVDC order wins accounted for the large jump in the HVDC order, but without the HVDC order also, our order growth is very robust across the segments. We saw a very robust growth of orders in the industry segment. As you can see, almost 100% growth compared to the last quarter, same year. And this also explains the sharp rise in the number of orders handled through direct sales in that. A considerable portion of our orders pertaining to renewable energy aligned with the central and state priorities, the capacitors and reactors, which is basically about quality solutions. Some of the marquee orders are railways, data centers, industry, such as a couple of orders for the traction transformer from Indian Railways and private equipment manufacturers. All in all, this quarter has been one of the biggest quarters in terms of the order inflows for our company, and orders came from transmission sector, industry, and railways, metro, and infrastructure. Moving to the next slide, slide number 10. As you recall, one of our key enablers for the growth and bottom line has been service and exports. Let me talk on the service and exports. Export was roughly, we will be talking about 20 to 25% was our target corridor where we would like to reach. Last year we already reached in the midpoint of the target corridor, and I'm happy to share with you that in this quarter as well, export was roughly 23% of total Hitachi Energy India order in this quarter from markets like Uganda, Saudi Arabia, and Azerbaijan, etc. We have a midterm, as I told you, midterm target 20 to 25% growth in order and revenue from exports market, and we have comfortably stayed in this corridor for the last 4 quarters now. And this is also important for us as the ongoing global supply chain constraints and the geopolitical issues are compelling global customers to look at alternative supply chain routes and partners. In our view, India has the potential to make its mark as a resilient partner offering high quality products to different markets globally. And moving from exports to service, our service portfolio continues to deliver with 10% growth year over year. We see the scope to increase certain markets, and we are adding a new customer names to our portfolio with a service order. As we have a huge install base, our focus is to penetrate into our install base and add more customers in that. So we have added new customers like CSPCL, Vartaman, STL Media as part of our service offerings to these customers. And as a small step of leveraging synergies with Hitachi Group, we took the first order for a modular switchgear monitoring from Hitachi Japan and for servicing the group company's GIS switchgear as well. So these are a couple of examples to just show that how our service offerings are going in line with our strategy and also going together with our new owners, that is Hitachi, where we are leveraging the synergies to offer our portfolio to them. Moving to the next slide, slide 11, financial performance. Our long-term strategy put in place to combat the global headwinds will take us through the uncertain market conditions. Even amidst the ongoing tribulations, we have delivered a sustained performance. The company booked orders for 3,554.6 crores, which is up 309% year on year. And as I told you, without HVDC also, our orders were up high double digits year-on-year growth. Revenue rose 24.4% year-on-year, reaching 991.3 crores for the quarter ended June 30, 2022. Supported by world-class project management execution, the company commissioned several substation, switchyard projects for utilities, industries, data center, and infrastructure sectors. In the quarter, profit before tax was 2.1 crores and profit after tax was 1.3 crores, while operational Ebitda stood at 35.7 crores. The quarter witnessed rising cost of commodities and supply chain bottlenecks, creating a drag on margins. Various measures are being adopted to reduce the impact with a special focus on semiconductor supplies. On the order backlog, we have a healthy pipeline that provides around several quarters of revenue visibility. During the quarter, we received a large HVDC order that has further strengthened our order book, which stands at all-time high of 6,777 crores. This helps us plan for the future and prepare accordingly as a company. Moving to my last slide number 12. Priorities for the financial year 22-23. COVID still remains a matter of concern, and we are determined to ensure that we continue supporting the healthcare infrastructure for our employees and their family and the community. We continue with our tried and tested three-pronged strategy, that is protecting our people, preserving business continuity, and preparing for the new norm. We will focus on high growth segments in addition to our traditional segment, as we have been talking about high growth segments where we have a very good value proposition to offer to our customers. We will be yielding a very good result. We continue to focus on that, building a sustainable operation to guide us through the short-term supply side challenges. We strive to capture a large share of the market with our localized portfolio, developing indigenous competencies and new business models through unique partnerships. As you know, our strategy is to grow higher than the market, as we are taking several leading initiatives, and that is helping us to grow higher than the market continuously for the last several quarters. We will strengthen our leadership position to continue to grow faster in the market with a single focus on cash over revenue. We believe this is possible with our emphasis on growing the high growth segments, mainly rail, transmission, renewable, data center, HVDC, power quality, and automation. We will continue leveraging our growth through digital solutions, traditional service offerings and portfolio, and exports, leveraging our local presence. As you know, we are manufacturing more than 80% of our globally manufactured portfolio we manufacture locally here. We would like to leverage this local manufacturing not only for the domestic market but also the export markets. We have and will continue to invest in the planet, people, peace, and partnerships with our commitment to making our operations carbon neutral and sustainable. That's the reason we have announced our carbon neutral strategy 2030, and we have also announced all the teams and the locations are working towards ensuring that we will meet our targets of carbon neutral in our own operations by 2030. We believe diversity and collaboration equals great innovation, and therefore we promote peaceful and inclusive society for a sustainable development. Last year, we have added 30% more female employees in our company. And this is our commitment that Diversity 360 will definitely bring diversity and collaboration to a great innovation to that. We will be working towards building a more sustainable and profitable company over a period of time. Thank you, ladies and gentlemen. I would now like to open the channel for your questions. Thank you.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and one on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Ranjit Shivram from Mahindra Mutual Fund. Please go ahead.
Yeah. Hi, sir. Congrats on the order win.
Thank you, Ranjit.
Yeah, if you can just throw some more light, like how much was the difference between us and the L2?
Yeah. So thank you, Ranjit. As you know, this is a tender where we have submitted, and it is not like unlike PTCL, it is not opened in publicly, so we do not have any privy to the information of L2 and other things. So what we believe is that we are when we have submitted our tender, so we are both technically and commercially competitive.
Okay, so it's more of a negotiated tender, right?
No, it's not a negotiated. It's like international ICB, international competitive bid, where we have submitted our bid, and then they have announced that we are the successful bidder.
Okay. And sir, how much is the value of this Adani order? Because I think you haven't mentioned that.
Yeah. So as you know, we have as part of our request from our customers, so we don't share the exact value as the bid details were not open publicly. So you can expect that the HVDC projects are very large projects and runs into several years.
So what's the timeline for this? When will it commence and when do
It started, the commencement has started, and we have to complete in 38 months.
28 months from this August 1st or this month?
No, 38 months. This is booked in the last quarter, so 38 months from June.
From June. Okay. Sure. And sir, just if I can ask, why the margins were a bit lower this quarter? Is it only to do with commodity prices, or you feel the competitiveness has been higher, or it's something to do with the product?
I think there are multiple reasons in this quarter. That is the quarter gone, which is basically I would put it in four buckets. One is that revenue of product mix. Second one, as I talked about, semiconductor shortages, because as you know, we use a lot of semiconductors in grid automation and also in HVDC product lines. And the third one is supply chain disruptions leading to increase in freight and logistics costs, and also sometimes non-availability, etc. And the fourth one is exchange and commodity price fluctuations. So these are the primary four reasons due to which the margins were lower.
Thank you. The next question is from the line of Apurva Bahadur from Investec. Please go ahead.
Hey, hi sir. Thank you for the opportunity. Sir, I believe the next large order that the industry will have its eye on is Power Grid's lay transmission. So any update on that? By when can we expect the ordering? What would be the size, and also do we intend to participate in the storage element of that order as well?
Yeah, thank you for your question, Apurva. And yes, Lake Hyderabad is a very key project, and as you know, HVDC, Hitachi Energy is pioneered in this technology. More than 50% of our installed base, including the new projects around the world, including India, runs through our technology. So we are very key. We have been working with our customers on this, and we believe that the tender would come shortly. Will not be in a position to tell exactly when, as we don't have any information, but we know that is the next HVDC project been awarded. As you recall, in some time back we are saying there's so much of renewable coming in, so much of energy transition. Our forecast has been that every year one HVDC tender will come up for bidding in this country for at least next 3 to 4 years. So we have been geared up, we are doing a lot of localization of our equipment. So for this part, for your information, for HVDC Mumbai project, almost 80% of that particular project will be manufactured in India locally.
Okay, great. Sir, on the storage component for the Leh project as well, do we have the technology tie-up for it?
We have, we do the storage as a battery energy storage. We do that, but we know that right now the plan for our customer PGCL, in our view, is that they will go with the HVDC first, and later they will come with the storage. But in any case, we have the technology.
Fair enough, sir. Very useful. Sir, also...
sorry to interrupt, Mr. Badal. So may we request that you return to the question queue? Thank you. We'll move on to the next question. That is in the line of Amit Mahawar from Edelweiss. Please go ahead.
Hi, congratulations for the large project win. Sir, I have the first question is basically on in this quarter, how much is the forex risk we have, and if you can comment on also the royalty and technology fees. Generally, is it higher than the last year average as a percentage of sales, or it's basically some color on that, and generally on profitability matrix, because Q1 was very sharp impact, and this is despite your gross margins, which are relatively stable. So it seems the overhead are basically on multiple points impacting the profitability. So if you can comment on the profitability and the details, sir. Thanks.
Thank you, Amit. I'll ask our CFO Ajay to answer your first part of it, then I'll come back and comment on the profitability. Thank you for the question. So the first part, if I understand correctly, was more on the profitability side and the royalty fee side. So let me first answer the royalty. First, let me take on the royalty fees. So royalty fees we are hovering around the 4%, so it is the same level. So we do not see any increase compared to the earlier part. That is one. Coming to the forex, for this particular quarter, yes, we have been impacted by exchange and commodity price fluctuation, and that is basically, if I talk about roughly 13 crores is the total value that I can attribute to for this particular impact for this particular quarter. So just to add to our CFO, royalty fee is extremely important because we are a global company. The whole energy landscape is changing so much, and it needs to be, all of our portfolio needs to be updated one, and on top of that we need to bring a new portfolio in that. So it's extremely important that this is like our investment for getting a new technology, new product, new offerings, etc. And that is the changing landscape of the energy transition. That is super important. And as I commented, we have basically the whole ecosystem is affected with the supply chain constraints. The supply chain constraint includes some of the semiconductors, not semiconductor issues. If you take the semiconductor issue, how it evolved. Initially it evolved that the prices were higher. Later on, then the delivery issues came out. Today, now it's not availability. So from the high prices, non-availability of not committing the deliveries to non-availability of semiconductors. So you'll see my slide also how the global semiconductor industry is facing in that. So that is the reality. So far, we were able to manage to our safety stacks, but while the safety stacks we have exhausted those safety stacks, and the inflows were actually reduced. So we have several actions in place to mitigate this particular challenge being faced here. So while we are also engaged with the CXO levels of these companies at the global level, we are also working with our other companies to have sharing of those things, and we are also redesigning some of our products where the semiconductor, availability of semiconductor is easier or better is that. So all these actions would not happen overnight for sure. It would take some time, and those are the actions, at least from a company standpoint, we are taking.
Thanks, Venu. And second and last question around basically, do you think high-speed rail ordering, now that EPC is largely going to be over in the next couple of months, one can assume that high-speed rail equipment ordering for you will happen in the next 12 to 14 months, and also on the upcoming tenders for Vande Bharat and other railway tenders, generally your assessment of the offerings, 2-3 large equipment, specs that Hitachi will benefit from. Thank you.
So as we have been talking about, we talked about SPDC, we have booked the SPDC lot in the last quarter. So similarly, the high-speed rail, which is funded by the Japanese government, is definitely in our radar. It is our targeted opportunity, and we have been working on that. And our estimate, or at least our assessment, is that the tendering will go by first quarter of the next year, last quarter of this financial year. So that is very, very clearly in our radar, and we are working because we have a lot of our portfolio which is locally manufactured can go into this particular segment in that. So similarly, there are many other train projects, for example, Train 18 is the one such mega project, Vande Bharat train. All these things we are working very closely with the train, the manufacturers, and we have a huge portfolio which go into that. And as and when it comes to that, we will inform you. But this is the most targeted segment for us as a company.
Thanks, Venu, and good luck.
Thank you.
Thank you. We'll move on to the next question. That is on the line of Varun Basrur from Julius Baer Wealth Advisors. Please go ahead.
Yeah, hello. Good evening, sir. I hope I'm audible.
Yes, please. Go ahead.
Yeah, hi. So my question is just a continuation of what a previous participant asked. On the other expenses, was the forex impact 30 crores?
It's 13 crores.
13 crores. And if you can just if you could, are there any other unusual or one-off expenses which you can quantify in the current quarter?
No, I think just to add to here, we don't have any other one-off things. I talked about basically the 4 things: revenue, product mix, semiconductor shortage, and supply chain disruptions, which is also increase our freight and logistics costs, and finally the exchange and commodity price fluctuations.
Sure. And so regarding our order book, what percentage of our contracts allow us to pass through any cost escalations that we encounter? Hello?
Hello, members of the management team. We are unable to hear you. Ladies and gentlemen, we seem to have lost the audio from the management. Please stay connected while we try to regain the audio. Ladies and gentlemen, thank you for patiently holding. We now have the line for the management reconnected. Over to you, sir.
Sorry, Mr. Varun, please go ahead and ask if the line got disconnected.
Yeah, sure, sir. So my question was, what percentage of our contracts allow us to pass through cost escalations? And one more question, if I may, is how would our EBITDA margins look in this financial year?
Yeah. So let me answer you the first one. That over 65% of our portfolio has escalation clauses. But you need to understand that is a traditional of escalation clause, either provision or formulas or something like that. But what we are facing right now is unprecedented. For example, your feed cost, those kind of costs are not covered in that, which is unusually very high. For example, our overseas freight is huge. It's not a percentage of increase, but it is in terms of X. So those kind of things are very, very difficult to quantify and do that. So that's the one, and we will not be giving you any guidance on the EBITDA margin for the quarter. What I can say is that I can give a little bit of color to you that we have been consistently saying that we have a clear strategy to grow ahead in the market. That growth, as you have already seen, we have a huge order backlog, 6,770 crores. With the fixed cost of our thing, when the revenue comes, then naturally we will have a margin accretion over a period of time. And then we also have a strategy on the exports. We have a strategy on our service offering, digital offering. All this would get us into a double-digit EBITDA margin by end of 2025 financial year. So last year, you see, we are very close to 9% of EBITDA margin. Thank you.
All right, sir. Thank you.
Yeah.
Thank you. We'll move on to the next question. That is on the line of Manish Dhariwal from Fiducia Capital Advisors Private Limited. Please go ahead.
Yeah, very good afternoon, and thank you so much for this opportunity. My compliments to the team for securing a very good traction on the order inflow. Now, given the fact that we are, living in turbulent times, higher orders also bring with them some risks, as we have seen this quarter's profitability. So I request the management to give us a flavor of what kind of profitability matrix can be expected, and what kind of escalation clauses that have been put so that this continuing volatility in the exchange rates, in the supply disruptions, etc., do not cause further impact on the profitability.
Thank you, Manish, and appreciate very much. As you know, our strategy, not this quarter, but last several quarters, we have taken a strategy that we do not accept any project which has no escalation clause, or any big order, large order, which does not have any escalation clause, or any order which go into a long gestation period do not have any escalation clause. So with that, all the orders, whatever we are securing, we have a clearly the escalation process built in, and also there are several force majeure clauses also we have kept as part of some of the orders. Semiconductors not availability also in some contracts we have brought in as part of the force majeure, which is a unique way to protect our margin and our contracts also in that. So as a company, we have seen this coming in. It's not that it's a surprise. Only the last quarter that impact is a surprise, but otherwise we know these challenges, and we were taking all the actions to face those challenges in that.
Right, sir. Right. So what I see now some of the customers they are like very highly leveraged, and what kind of data cycle that we have on these contracts, meaning the payment terms that we have agreed on them, meaning are we taking any risk on that?
No, sorry, it was not clear. Can you please repeat once again? Manish?
So the payment ability of the customers is also to be, it's also a risk. So given the fact that the leverage, the position of some of the customers is like very high, so how are our payment terms covering those kind of challenges that may happen?
Right. I think again, as you know, this is always a risk here, and that's the reason we also have a clear strategy that we also negotiate the payment terms, which is like for example, we'll have a large contract, a large orders. We have a good level of advance payments, and the rest of the thing is covered through a confirmed letter of credit with that. So we have been doing this, and so far we have been successful. There could be some percentage of portfolio orders booked may have a direct credit, but by and large, most of our orders comes in with a clear and committed payment terms in that. Payment security.
Wonderful, sir. So all the very best, and thank you for this opportunity once again.
Thank you.
Thank you. The next question is from the line of Viraj Bhutani from Ebitda. Please go ahead.
Yeah, good evening, sir. Am I audible to you?
Yes, Mr. Viraj, go ahead.
Sir, my question is in continuation of the previous participant. So, listening to your comment, is it fair to say that we have fairly learned about in this quarter, so a lot of things been taken care going forward from here in terms of escalation clauses, commodity pricing, other things?
What I was telling you, Viraj, is that certain things, even though we have learned, for example, semiconductors we have learned, it's not possible for us to overcome the challenge if the supplies are not coming in, right? So while we are taking a lot of action to redesign the things, that will take time. That will not happen overnight in that. So when it comes to the semiconductors, you have also probably seen this. The best estimate is that it will definitely improve, but to normalize it anywhere, it's going to the 2023 or so. It will improve from quarter to quarter, but to normalize to the level where we used to see, and that is not going to be before, at least in the year 2023. So,
okay.
And same is the case, what we have done in the escalation clause, traditional escalation clauses have been built in that, for example, the copper, the QRV, the oil in the transformer, and steel in that. But the escalation when it comes to the feed costs, when it comes to our overseas, because we do a lot of exports now, as a strategy we have built in exports, right? So those things will take more time to stabilize it,
Okay. So my next question is the orders which you have received are margin accretive, or we have been sacrificing some margin to penetrate the market? Like, if you can give some sense on that.
We have, as you know, in the case of the HVDC, we are a pioneer in this technology, right? We never taken an order to sacrifice our margin to get an order. We don't want to book an order for sake of booking an order, So for us, every project, we always look at risk-reward portfolio. What is the risk and what is the reward it will give? And once it fits into our strategy, then only we go for it. So that is our clear strategy. We have it, and we adopt for every project we look at it, including this one.
And so my last question is, we supply to the government utilities. So do we take into account the debtor cycle, sometimes government state utilities in particular take long time to pay. So, we take our precautions when we provide to them whatever service or products we provide to them. Or?
No, Viraj, can you please repeat if you don't mind, because the line is not very good.
We supply to a lot of utility companies, the power companies, which is probably the government, central government, state government. So when we supply to them or offer services to them, do we take care of the things that the payment terms are very clear so that our payment don't get postponed, which is the case with the government, So
absolutely. Absolutely. No, we do not, the moment we see any risk, we don't even go for that particular project at all. In some electricity boards, where we see a huge amount of delay, then we will always, take a decision on that. But most of our contracts, which are with the central utilities like PGCIL or Indian Railways like CLW, DLW, where we see our payments are fairly accurate as per the payment schedule.
Okay, so that's it from my side, and all the best, sir.
Thank you. The next question is from the line of Vishal Biraria from Max Life Insurance. Please go ahead.
Yeah, thank you. So something on the export front, we had a target to increase it to 25% in a few years. So where are we on that track? And have we seen incremental traction because of the chaos that?
Vishal, I think your line is very feeble. Can you please speak louder?
Yeah. So my question was pertaining to Europe, to exports mainly. We had set a target of 25% exports of revenue in a few years. So where are we on that? By when do you plan to achieve it? And the other is, are we seeing any near-term traction on exports because of the chaos that we are seeing in Europe because of the energy crisis and other aspects?
Yeah. I think, when it comes to the exports, I think we ourselves said a midterm target of between 20 to 25%. And last year, we were in the range of 23% of our revenue, and our orders came from export last year. And this quarter also, I was telling you that we reached exports 23%. So we have a two-pronged strategy export. One is directly we export some of the products. We have a global feeder factory. Some of the factories, we have a global factory, like our circuit breaker and combi-flash relays. They go everywhere around the world. And then second strategy is that we also have a global feeder factories. They will sell the components to some of our factories. And the third one is we do the direct sale to customers like in Africa or in the Middle East and also South America, etc. And we have a very clear strategy to bring it to the 25, and we believe that we already reached the mid corridor of our thing, even though we kept 3-year target, but we have reached and we continue to grow on this side.
Okay. Have you seen any near-term delta in exports or inquiries from Europe or from the feeder factories because of the chaos in Europe where the production has been?
Yes. There is a I don't want to say it's chaos, but we are going as per our strategy. We have a very clear strategy to bring some of the products to the local manufacturing. And that's the reason we have been expanding. We have been also telling you that, we have a clear capex to support the exports. We have inaugurated one factory last quarter, and then we also have several factories lined up as part of that thing. We also, one of our conference call, we have also told what are the factories we are investing and expanding it or coming up with a new greenfield site for this plant. Thank you.
Thank you. The next question is from the line of Kunal from B&K Securities. Please go ahead.
Yeah. Hi, sir. Thank you for the opportunity. Sir, I just wanted to quickly get your view on, so when I look at some of your end markets, like data centers, railways, renewables, they all are quite high growth markets. So I just wanted to get your view on what can be the medium term or long term growth number that one should work with in each of these sectors, like utilities, industries, and transportation, as you classify it. Is it right to assume that all of these are mid-teens kind of a growth sectors, or would like to hear your views on the things, sir?
So, Kunal, thank you for your question. If you really look at the Indian power sector, really going for a huge transformation, right? The growth in the energy or power demand is phenomenal, right? It's already reached 200 gigawatts. It needs a lot of renewables coming in, and it needs a lot of technology support to the grid and the rest of the industry associated with that. So our growth sector is definitely a transmission and the renewable, right? So this will be a far higher growth. Everything will grow, but these are the growth, they grow higher than the normal market average in that. So HVDC transmission, for example, HVDC is one example in that. Now HVDC previously one HVDC project for 3 to 4 years. Now we expect at least every year one HVDC project, or every 1.5 years one HVDC project. So that is the kind of developments are taking place, and that's the reason we are also localizing a lot of equipment which we used to bring it from outside of from our overseas companies. So we are manufacturing everything here in that. So that's one aspect of it. And the second thing is, we see the industrial capex. We have seen industrial capex, a lot of industrial capex they have already announced it. Maybe due to the current macro situation, there could be some delay in decision making, but we are seeing our pipeline is very robust at this point in time. Our pipeline in terms of transmission, in terms of the renewable, in terms of in terms of the industry capex, whether it is steel and cement and aluminum, they are really going for expansions and also the data centers. So they have the high growth segment. They are growing higher than the market average, and we have a clear strategy to grow above the market. And that's the reason we have seen our orders in the last quarter that reflecting our strategy.
Sure, sir. This is really helpful. Just a quick follow-up on that one, sir. You mentioned about, localization. So, currently, what would be the level of localization across the company?
So I would call as it depends again product to product, things like that. What I was saying is that globally, whatever we are manufacturing, if we are manufacturing 100% of our portfolio, 80% of that we are manufacturing locally.
Oh.
So that means everything is available locally in line with the Make in India, bringing the new technology. Last quarter we announced opening up a new factory, which is a resin integrated polymer bushing, which is the first time 400 kV transformers, that kind of bushings were being manufactured here. This is a very high technology intensive product, so we got it here and we are manufacturing here. So this is just to give you a flavor of it.
Sure, sir. Oh, great, sir. Thank you so much and best of luck for the future.
Thank you.
Thank you. Ladies and gentlemen, due to time constraint, that was our last question. I now hand the conference over to Mr. N. Venu for his closing comments.